Hello viewers, welcome back to Centrishala by Centricity, and my name is Aditya. As a country, we are expected to touch $5 trillion in GDP by the year 2025. There have also been multiple reports which cite that India could potentially become a $30 trillion economy by the year 2050. One of the most important parameters of the success and growth of an economy is the growth in its capital markets. There is no doubt, and there have been many reports by various industry experts, that the Nifty and Sensex will touch new and incredible heights in the next couple of decades. As an investor in India's growth story or in the India's equity capital markets or various other forms of investments, one is expected to reap huge benefits by betting on India. But as an intermediary or as a professional in the wealth management and distribution space, how exactly can I capitalize on this incredible India growth story? So for us, what are your views on that? As an industry stalwart and having been associated with the asset management and distribution industry, what are your views on this?
Would not to be Aditya embarrassing me, but then yes, I have seen a large part of this journey. So I was fortunate enough to get attached to this industry in the year 2003, and I have seen the evolution ever since. So from a phase wherein mutual funds and investing was supposed to be not a very healthy thing and not a very acceptable thing, I have seen that people have accepted the product class, mutual funds especially, and people are forthcoming and they are investing into mutual funds. And I think so that is very visible in the AUM growth we have seen in the last 2 decades. So when I joined the industry, AUM was close to around 1.5 lakh crores way back in 2003, and Sensex was somewhere around 3,000 to 2,500 levels. And currently, you know that the AUM of the mutual fund industry has swelled to 47 lakh crores. And
as we speak,
yeah, and we know where the Sensex is right now. It's closer to around 67,000 levels. So I have seen new highs being made every now and then, and you were a big part of that journey too on the other side. And one category of people capitalized big time on this movement. They were the financial intermediaries. So basically whom we call as MFDs or IFAs. So I have seen people making their career in this. They have people who are forthcoming at that point of time. They have built huge AUMs by doing good to their clients. By creating wealth for their clients, they have created wealth for themselves. And this is the beauty of this particular industry, that you get paid to help others, create wealth for others, and in that process, you create wealth for yourself. And one very big thing, Aditya, this thing which is a very big advantage in this is the requirement of capital is practically zilch. You just have to have the capital of knowledge. And you can also start it side by side. So it is not necessary that you get full-time attached into becoming a MFD or an IFA. You can start it simultaneously with whatever you are doing right now, because all of us have a big social circle. You know many people around us who are investing, but unfortunately, they might not be getting the best possible solutions at this point of time. And we are moving towards a time where financial solutions will matter a lot, and the depth of it.
So Anirudh, you have had a very similar and very extensive journey in the wealth management space. I know personally that you've been associated with leading wealth management companies ranging from Citibank to IFL Wealth and then Julius Baer lately before you joined Centricity. So how has your journey been, and how have you seen the landscape shape up in the last 20 odd years in the Indian capital markets or wealth management industry?
So Aditya, when I started, the focus was primarily on mutual fund and insurance as a wealth manager, right? And as Faraz also said that, there was a time when the acceptance of mutual fund itself was not so good, right? And mutual fund distributors had to really go out and explain it to their investors that why mutual fund is good and they should be doing it for the long-term growth. From those days, I'm talking about almost 2005 onwards to now where we are. In last 1 decade, we have seen not just mutual fund, which has grown to almost 47 lakh crores as we speak, even the other product categories or investment opportunities have grown along with them. Like PMS has been growing at almost 25% CAGR on a year-on-year basis. So in last 10 years, the EMs have almost doubled. AIF again, has been growing at phenomenal pace. So where a mutual fund was in about say 2005 to 2010 period, we are in that phase when it comes to other products like PMS, AIF, P2P, bonds market. That is also really developing at a good pace, almost at a 25-30% CAGR. And now if I translate that to a wealth manager journey, if I am going beyond just being a mutual fund distributor to converting myself into a wealth manager and actually looking at a client's holistic portfolio and look at financial products in a total, I can go much beyond than mutual funds and insurance, and I can increase my earnings. I can take care of clients' portfolio in a much holistic manner.
So what you're saying is that not only have there been multiple asset classes which have come into the fray, but also different product classes.
Absolutely.
So within the same asset class, for example, while there would have been only mutual funds in equity or debt, now there are other instruments like AIFs or plain simple bonds and variety of bonds and even P2P etc. which has come into the play. So one thing which I wanted to understand, I have often heard about two terms and I have not been able to distinguish between these two. One is something called or somebody called a mutual fund distributor or an MFD, and somebody called a financial product distributor. So does are both of these the same? Are they used in the same context, or are there distinct distinctions between them?
It's an evolution, right? It's an evolution. Every industry sees an evolution. So MFD was somebody who used to deal only with mutual fund products, mutual fund distributors. But then, see, there are a couple of things which I'll suggest right now. One is the need of the people and the solutions which are available for those needs. They are evolving, as we just now discussed. So there are newer products, newer product categories which are coming in. And if a person is just sticking to one product basket, his growth will be limited. So it will be something like he's tied to a tree kind of. So there will be only a particular grazing area. And two is that the current times you're seeing the blooming of many DIY platforms which are offering practically all the products to the clients. And see, technology adoption has been kind of catalyzed by COVID.
Yeah,
we all know that. So many people who are very apprehensive of using these online platforms earlier, now they are very used to it, and in fact now people are demanding online services from each and every product category or the industry. So as I said, it is an evolution. So, and plus the needs of the people have kind of evolved as well. So a financial product distributor is one who is not only suggesting mutual fund as a solution for the asset allocation and goal planning needs of the client, thus being able to capture a bigger wallet share of the client's available money for management. And that, see, the other positive thing is, if you see that we always say diversification is good. Even mutual fund distributors tell to their clients, please diversify so that the risk is distributed. Same thing applies to mutual fund distributors as well. See, because again, in that whole evolution of the mutual fund industry, which I was a part of, I have seen that the remunerations were pretty decent initially, and then slowly over a period of time, this remuneration has come down. And there have been various reasons for it. Some have been regulatory because of some reason.
And the industry has also grown, so it obviously makes sense.
The second is there is something called as a TER, total expense ratio. So the larger a fund becomes, the TER of that particular fund keeps on coming down. So obviously the earnings of the AMC, that is coming down, and thus the distribution fees also has come down drastically over a period of time. And obviously there has also been a lot of serious effort by the regulator to keep the expenses in check to ensure the well-being of the ultimate client or the investor. So from that perspective only, if you see, we need to, the MFDs also need to diversify and their source of revenues. And so that is one. And obviously the bigger reason is the needs of the clients are evolving. There are better solutions now, and we need to suggest that. And people are becoming very, very aspirational also.
Yeah.
So there is, if you suggest a very wonderful PMS to a particular your client, it's like it is a slightly niche product. So psychology investment is all about psychology. So there are two main jobs of a mutual fund distributor. One is taking care of the psyche of the investor, so managing his greed and fear basically.
Yeah.
And the other thing is offering the best possible solutions.
Right. So what you're saying is that it makes sense both for the distributor himself, because he's diversifying his source of revenue, his source of income, and also from the perspective of the investor himself, he gets access to more products other than mutual funds. He gets access to more asset classes, etc. So it's a win-win situation for both.
It is something like, if we go back to again the early 2000s, there was only FD as an asset class, and possibly there were very few people investing in direct equities. And that confidence was actually hit by various scams which happened over that point of time.
Yes.
So FD was the predominant asset class, but then later on you saw the emergence of the mutual fund industry.
Yes.
And out of the blue, suddenly it became one of the best possible investment products, and we started seeing those campaigns on mutual fund segment.
Yeah. Yes.
So now similarly, other products will also evolve, and I have seen that always it is the people who actually hook onto a particular product early on, they are the biggest beneficiary.
Yes. So in fact, I can resonate with the fact that during COVID, a lot of first-time investors skipped one level, skipped the initial level and straight on went on to become, stock investors through very simple and, very, very easy to use platforms like Zerodha or Upstock. I've already used the names, but they're vastly superior and, vastly popular platforms. And all of it was because the interface was purely digital, no human intervention involved, and the process was very simple.
Right.
So that is one. Second, what I wanted to understand is that when we say financial products, it may or may not be just investment products, because there are financial products which are other than investment products also. For example, there could be, mortgages, loans, loan against mutual funds, or even insurance products which are not investment products, but at the same time they are financial products. And make sense to distribute them because many of these products are pull products. So somebody wants a mortgage, somebody wants to buy a house, he definitely needs a mortgage. Somebody wants to buy insurance, he has to buy it. If you don't sell it to them, he's anyways going to buy. And there are so many DIY platforms available in the market. So as a distributor, does it make sense to also have an inventory or a choice of products which are not non-investment based to diversify a source of what are your views on that?
Absolutely, Aditya. Let me answer it in one simple word.
Yeah.
If you're not doing it, somebody else is doing it.
Correct.
And therefore, it is in your best interest that you have every possible arsenal in your kitty,
Yes.
right? And when I say arsenal, basically the options of investments, the options of financial products, and help to your client, the need, right? So it all comes back to how better you understand your client and their needs, and how you can provide it to your clients. The moment you try and match their needs, the sales and the remuneration becomes an automatic byproduct.
Yeah.
Right.
So again, here I would like to actually point out, there are two requirements of a client. One is to invest, and at times he needs money also.
Yeah.
So you have to have a complete range of products which are catering to both the sides. So as you rightly said, mortgages, LAS, LAP, these are even credit cards, so account, everything. So that is also one requirement. And the other requirement is investing. And the third requirement is risk cover.
Yeah.
So if you have the entire bouquet of products on your side, then obviously you are enhancing the wallet share, and you are actually enhancing the stickiness of that particular client towards you, which is very, very critical. Like in very simple terms, if you don't have a product, you are actually opening a door for the client to move on.
Sure.
And in this highly competitive world, I think so opening doors is a very, very dangerous thing to do.
So one thing that we can safely conclude on, that it definitely makes sense to have a varied products in your basket to take to your clients, to distribute. A lot of them are pull products, and some of them are products where we need to create a need for the client when the client has to be adequately educated to buy those products, etc. But from a regulatory perspective, the simplest product say is a mutual fund, where if I understand correctly, one has to pass a NISM Series 5A exam and then get a ARN license to actually distribute these products. Are there any other regulatory requirements to become an MFD? And if I have an MFD, are there any additional requirements to distribute other products?
So Aditya, thanks to SEBI and the country's regulation, it is very easy today to become a mutual fund distributor.
Yeah.
All you have to do is give NISM 5A exam. And for that also, we have created various modules on our Centricity channel to help upcoming MFDs or, who want to become MFDs to just go through those channels and understand what NISM 5A is and just appear for the exam. Number 2 requirement, all you need is a simple computer or a laptop, to start engaging with your clients and, start distributing your products with your clients and onboarding them.
Again, see, here I would also say knowledge also plays a very important part, because
The training.
is training part, because you have to know the product like the back of your hand to actually understand what is the best product for your client. Because generally, the financial industry has been plagued by mis-selling and people running after brokerages. So the first thing or the first suggestion or advice, whatever you may think so, is don't run after brokerages. There was this dialogue in this Three Idiots movie wherein Amarant said, don't run after success. Run after perfection, and success will chase you.
So the one thing that I've noticed, because I have had a fairly long career in banking, and that is that when it comes to institutions, there is an automatic trust that develops with an investor or with a with a consumer of wealth management services. But when it comes to an individual, there is usually a trust deficit.
Yes.
It is difficult for me to trust an individual financial distributor and a mutual fund distributor rather than trusting a bank. Whereas, I'm sure mutual fund distributors have excellent, knowledge about their products and they can actually educate me well. But there is an overall, negative persona about a distributor, which I tend to avoid. So, what as in can adequate training and adequate awareness about products be a hedge against that?
Absolutely. When a distributor is on the client side, understanding their needs, and before that, understanding the products, and what are the risks associated with those products, and not trying to really missell any product just because it's a high commission product. When you take care of these steps, you're already, winning the trust of a client. And this business or this line of, business is all about trust, because it's hard-earned money of your investors, and you need to invest very, very carefully and cautiously, right? As per your client's risk profile, his requirements, you need to invest that money, help them invest that money.
So again, see, the beauty of this industry is that if you work in your client's interest, the AUMs of your client grow because of the markets, underlying markets, because markets are also moving on their own. So as I said, so Sensex at 3,000 levels in 2003 to Sensex at almost 67,000 levels in 2023. So what is happening? The money which you have invested on your client's behalf, that has grown in itself.
Yeah.
So what exactly is happening is that whatever decisions you are taking, there is an automatic generation or automatic enhancement in your income, because all these products are trail based now. So if you take care of your client's interest, you get them into the right product, if you get them into the right asset class, the entire journey, the growth in the capital markets is further going to enhance your earning incomes. So that is one very, very important thing to this thing, which has to be underlined. So,
and the second aspect is, how does a platform like Centricity, which primarily works with what role can they play in helping these partners in these journeys?
Right. So, Aditya, we have treated our platform's name is OneDigital, from Centricity. And why we have named it OneDigital? Because of four, we are taking care of four problem statements or four pillars. Number one, product marketplace. where we are actually empowering our mutual fund distributors and ISAs partners to have access to each and every financial product that is available for investment for their clients. Number one. Number two, once you have that marketplace, once you have access to those products, how do you execute that?
Yeah.
So on our platform, you will be able to execute them digitally, right? Number three, once you have invested in those products, the important part is how do you report them, right? Your MISing, your reporting, analytics, because it's important that you can't fill it, shut it and forget it. You have to keep an eye on those investments and the markets and the various vagaries that are, actually influencing your investment returns. And as a mutual fund distributor, it is expected from you that you will keep an eye on behalf of your clients because they are busy in their own lives and they need your expertise on it. And therefore, on our platform, you'll be able to do that within minutes, right? You will be able to generate reports, you'll be able to generate analytics, MISing, everything in one consolidated place, irrespective of the asset class, product class, multi-asset, multi-product reporting in one place. And the fourth and the most important one, which we have been talking about as well, learning and development. And that's where I think, the significant emphasis from Centricity's end will be given, and we'll be supporting our partners in terms of learning product, learning new ideas, concepts, what are the risks associated with it, if they are having changes in regulations, to keep them, updated about it. That onus is on Centricity to, upskill and uptrain our partners so that they become better distributors and advisors for their own clients. And this journey becomes much smoother for themselves as well as their clients.
So one more thing I'd like to add is, again, there was this recent data that 40% of the HNIs are residing beyond metros.
Yes.
And most of the private banking companies are kind of concentrated in the metros.
Correct.
Yes, there have been certain suitcase RMs as we know them. But then most of the MFDs who are located in, say, tier 2 cities or tier 3 cities, or in fact, not only mutual fund distributors, but the clients, they don't have the access to the products which are there in the market, which are available only in metros, and which might be the best possible solutions at this point of time, or superior solutions, I would say.
Correct.
Superior solutions. So again, the whole mission vision statement of Centricity revolves around that we want to democratize the private banking experience to each and every person, irrespective of what city they are residing in and what kind of income levels they are at.
Which makes sense because from what I have been told, and various reports also suggest that income gaps are closing very, very rapidly between tier 3 and 4 cities and tier 1 cities and metro cities, and the population in these cities are also very aspirational, and they want to move to the next step in life, and not only in terms of consumption of superior products but also consumers of superior wealth management services. And currently the distributors or advisors situated in those geographies may not have access to superior products or even know-how of pitching those products to their consumers, where platforms like Centricity can be of major help. Also,
sorry, I'm cutting you short. One thing which you actually said initially, that people tend to believe in the banking backed wealth management outfits or RMs more. Why? You have to understand the reason why. Because they have an institutional backing.
correct.
There is a product team which is working. There is whitelisting of products which is actually happening, and they are being kind of suggested. That is at least the perception.
Yeah.
So they have a lot of confidence. So Centricity is providing that institutional support to these standalone IFAs who are not able to kind of have the research capabilities and technology capabilities which all these large institutions have. So we are the institutional support.
And at the same time, they don't need to be subject to the shifting priorities of the institution. They can do it at their pace, and they can do it with an alignment to interest with the client.
See, the biggest challenge is if somebody is working. See, this is what I said in the Hindi edition of this, is that there are a lot of pressures when people are wanting to become MFDs or financial product distributors, and say they want to turn into entrepreneurs because they are doing the same thing for somebody else, They are pressure targets, they are number targets, they are revenue targets. When they become entrepreneurs, okay, the biggest challenge for them is they have been working with an institution. So it is kind of, they have been spoon-fed till now. And when they are out in this world on their own, it becomes very, very difficult.
Yeah.
So yes, there are certain solutions, standalone solutions that offer only mutual fund reporting,
Probably only bond.
only bond reporting. But see, that is not how efficient advisory or distribution can work. It has to be very, very synchronized, because you cannot spread across 10,000 apps or,
Yes.
I'm sorry, I'm exaggerating the number, but then how much can you be spread when you are only one individual?
So the idea is to basically package the entire experience, multi-product experience, crunched into a laptop or a phone, right? Which he can offer to a...
If you see, again, whatever happens in the developed world, okay, we are also, I think, moving towards that time very soon. But then whatever happens in the Western countries, ultimately that happens in India also with a time lag.
Yeah.
So if you look at the the whole landscape of IFAs in European countries or in the US, the developed countries, you have seen a shift, but practically the standalone IFAs are not there. And there are many reasons to it. One is the regulatory changes which are actually happening over there. So the regulatory requirements for IFAs is very, very strong in the developed countries. And if you see, India is also slowly moving towards that. So when I started in the mutual fund industry, there was nothing called as an ANFI certification. Anybody, any Tom, Dick and Harry could become a mutual fund distributor. There was nothing like that. So now, then there came a law by SEBI that in case you have more than 100 crores of AUM, you are subject to audits. So again and again, all these regulatory requirements will keep on enhancing. And I think so that is the way any industry evolves. So things are going to become very, very difficult, one. Point number two, when you're joining a platform, you get economies of scale. Point number three, technology is not cheap.
Yes, and it's very difficult for individuals to go ahead and...
The kind of platform what Centricity has actually built, it is a huge expense which an individual person cannot make.
Yeah.
And the kind of research team, the various, that whole institutional support what Centricity is actually providing. So entire debt desk, an entire equity desk, an entire product team, which is doing all the due diligence, this thing for the partner. These are things which are not possible. And then these were the reasons why I had this thing. And then the whole evolution of products which is actually happening. So this is the reason why the IFAs are practically, standalone IFAs are practically non-existent in the Western countries, and most of them are attached to the platform. This will be a trend in India also.
Correct.
And I strongly believe that platforms will add a lot of value add, and especially platforms with the intent what we have.
Yeah, a multi-product, multi-asset. Yeah.
Yeah, Aditya, in fact, the trend has been that most of the IFAs who are in tier 3, 4 cities or even smaller or even larger cities for that matter, individual independent IFAs, they have been losing out on HNIs and ultra HNIs and bigger transactions. For example, in a lot of cities, a lot of money has been created in last 10 years because founders have got into money. There have been a lot of startups who have, where exits and stake sales have happened. But how many IFAs were able to really crack into those relationships? The biggest reason was they were individuals, right? And they had no institutional backing. They had no product and platform support for them to go and pitch it to their or the new unknown clients and HNIs and ultra HNIs. Yeah. And that's where our mission at Centricity is that we want to empower each and every IFA, with that support so that they can go and meet every HNI and ultra HNI in this country and make them their clients.
So beyond products, there are plenty of services also which is available on our platform. Very simple thing being will planning. I think so people after COVID have understood the importance of will planning, estate planning, NRS investments. Then other than that, immigration planning.
Yeah.
So these are certain value adds which the platform is also providing, and which will become very, very relevant and which are very, very relevant in current times. So this is the whole see, all these bigger platforms, they give that value proposition. I'm giving you a very, very differentiated thing. I'm not giving you only mutual funds. And that is why you see many people moving from the so-called MFDs of past to the institutional backed people.
Yeah.
So they may be banks or other
Wealth
management people. So that is that entire shift which is actually happening. So this is where Centricity steps in. I mean,
So if I may, kind of stepwise summarize this. So one thing is for sure that, like we discussed, that India is moving in a direction where the capital markets are going to be a big beneficiary of the India growth story, right? If we end up becoming a $20-30 trillion economy, then obviously it will be followed by a very robust equity capital market or debt capital market, and a lot of scope for distribution of financial products for which the demand will significantly increase. So if the demand for these products will significantly increase, then there's obviously a huge scope for distribution of these products. So if I want to build a career, if I want to become a solo distributor of financial products, then obviously there's a huge scope. Second is that to be associated with a platform which can help me in this journey and to give me an institutional anchor of sorts and help me with the products that are to sell, help me with the training to sell those products, and a robust technology platform to transact and report these products to my clients, then obviously one has to be associated with a very robust multi-asset, multi-product platform. And fourth is that obviously we'll have to kind of discuss our platform, which is Centricity, which
yes.
Yeah.
So that is phygital.
Yes.
So our model is phygital. It is not only digital, because at the end of the day, we are Indian.
Yes. So
our personal.
Yes. So what we have seen is that, and it's been a common experience, that as Indians, we are traditionally technology deniers, right? So we use technology in a variety of ways, but when it comes to money, we kind of shy away from technology, right? We somehow are not very comfortable, and one needs a nudge and one needs a direction from somebody sitting right next to them and saying that this is the good, this is the right financial product for you, and trust me, and I have the requisite skill sets, and I'm doing what is right for you, and therefore you should do it. And that nudge is very much required, which differentiates me from a pure DIY, do it yourself kind of a platform. And especially when it comes to larger sums of money, when the sums of money that need to be invested runs into a couple of crores, then obviously one has to have a discussion with the physical.
There's another angle to phygital also, because at times my partners, so if they join a platform and if they don't get that ground level support, because initially they need to be, especially people who are just starting in this, they need to be kind of treated like babies and then nurtured.
A lot of hand-holding is required.
A lot of hand-holding is required. So that phygital model ensures that. Point number 2 is where Centricity is giving that advantage to the mutual fund the mutual fund distributors is, again, as I said, we are giving that institutional support. So it is not only just providing or making them learn, but initially walk along with them.
Yeah.
So we have this portfolio coach or investment counselor kind of a concept, wherein initially, when you till the point of time you are not comfortable, somebody who's very, very experienced in this trade can actually come along with you and give you that confidence, that initial
basically
push.
Be on your side of the table, the partner side of the table, to converse with the
genuinely our intention is to expand your business and grow your business, expand the thought process what you have. Because generally what I have seen is what is limiting you is you yourself. Because we start believing I cannot do this, or the people I know, they cannot do this. So we actually create these hurdles for ourselves. And when there is somebody who's very, very neutral along with you, they will actually help you expand that particular horizon.
Right. So overall, it's been a very good discussion, as in a lot of good points covered. Definitely instills faith in the fact that the financial distribution business is going to expand manifold. The number of intermediaries who are going to join this industry and become independent financial distributors, product distributors, are going to expand manifold, and hopefully the role of Centricity in this.
Sorry, I have this habit of kind of jumping.
No problem.
So, again, see, one very big advantage of joining Centricity as a partner is that when you join Centricity, because most of the platforms which are there in the market right now, they are only designed for a particular category of investors. So, but with Centricity, you can actually service the entire spectrum of your clients. So somebody who is wanting to start that 2,000 rupee SIP,
To somebody who wants to invest 2 crores in an AIF.
2 crores in an AIF, to somebody who has hundreds and hundreds of crores of wealth, and they just want to kind of...
So we cover the entire spectrum.
So that entire spectrum is there. And that is why, because people like you and Anirudh, who have that DNA of managing this money, that has been inbuilt in the platform in itself.
So that's been very helpful. Thank you so much, Anirudh. Thank you so much, Faraz, for joining us today. And hopefully this has been of use to our partners and financial product distributors. Thank you, viewers, for joining us today on Centricity.
Thank you.